There we go. Awesome. So the session is being recorded. We're going to go through our set list of pairs as usual. Let's just remove all of our tags from last week. And then obviously what we're going to do is just go through the pairs, find a directional bias on our dailies, find some points of interest on our 4 hours, obviously to find those trading opportunities. And then once we've got a directional bias and a point of interest, then the week becomes so much more smoother because we know which direction we want to trade in next week. And we know exactly where we're looking to find those trade entries. So that's the whole purpose of our weekly market forecast sessions. And then again, going through the analysis with you guys, it allows, I guess, for someone that's interested to basically see what my process is. What is the process of analysis? Because it is a process. And if you don't go through the process the same way every single week, you're always going to get different results. But nonetheless, let's see what's going on in the chat. I see in Thunder, they're saying, what's good, what's good, what's good. Man, nice to have you, nice to have you, nice to have you there in the building. Thanks for the shout out there, man. Nice to see you there. Nice to see people are active there. At least I know I'm talking to people. I'm not just talking to myself. Otherwise, let's get into the analysis, guys. So we'll start off with AUDCAD, and then obviously we'll just go through our set list of pairs for the week. So with AUDCAD, higher time frame, same as usual. We've got momentum. We've got a corrective structure. We've got momentum breaking our corrective structure. What we're going to do is just focus on the most recent price action there, and then we'll obviously make decisions based off what we have cooking here on the most recent price action. Let's see what's cooking there in the chats. Kenny, I see you there in the building. Can we also analyze GBP JPY? So let's see, once we've gone through our set list of pairs, let's give it a gander and see what's there. If it looks very much different from all the other JPY code pairs that we've got on the list. Otherwise, let's just keep going with some AC. So basically on a high time frame on AC, what we've got here is we've got this break in a retest area, right? Previous resistance that we have that managed to break a level of structure over there, that we see price action breaking impulsively, and obviously some sort of a retest area, right? So what we have here is obviously we isolated some sort of a corrective structure because this new momentum that managed to break this resistance over here, the most recent high, and as well as give us a new higher high over there, that was our extreme high. This new momentum here is the momentum that we want to trade in the direction of, because that's the momentum that's managed to obviously break levels of structure. So on a higher time frame, at least on a daily, or at least for a daily perspective, we want to be bullish because we want to trade in the direction of this momentum that's been managing to break structure and to break structure impulsively on that note. Let's go down to a 4 hour, or at least before we go down to the 4 hour, let's just delete all of this crap that we were drawing over here, just so that we keep our charts a little bit clean. So then the setup is basically last week's setup, because this whole week, what we've been waiting for, price has just been chopping. And yes, we've been waiting and coming there slowly, but we've been doing so very slowly. This was like literally the whole week's price action correcting to where we've been wanting to trade from last week. So we're basically just going over last week's analysis. So what we looked at is basically, yes, we had obviously markets being in some sort of a downtrend, but last support that we have over here, our previous support, we see price action breaking below that level of structure and breaking back above this level of structure. So obviously this is showing us that price is being corrective around some sort of a support. Naturally so, our eyes are looking for a corrective structure. The corrective structure that we've managed to find over here is, at least in this case, some sort of a range where this is the extreme high, and obviously this is the extreme low, a high and a low. And ever since we've seen this high and this low, price action has been inside, creating levels of structure inside of there. So what we're doing is we're treating this like a range. Yes, we do have our higher time frame probabilities that we've spoken about 10 million times. That's why I didn't even speak about it. We've spoken about this area, this POI, a lot of times, and we're just exercising patience. So I don't think we need to speak about it. Price is very far. Let's just focus on what will give us some action, what will give us a little bit of action next week. So nonetheless, what we've got here is we're stuck inside some sort of a range. Now, we all agree that when we're stuck inside of a range, we look for two types of trading opportunities. One, we either look for opportunities at the extreme highs and extreme lows. Two, we wait for chart patterns to provide us entry criteria or or give us some sort of a point of interest for us to be able to trade. Nonetheless, in this case here, we've got price action coming down towards the low of the range. We've got a POI over there by this momentum shift over here. In terms of the chart pattern that's forming here, doesn't really look like something that we can add a trend line to, because I feel like I'd be forcing it if I added some sort of a trend line. The only way I'd be able to make sense of what's going on inside of here is just by adding this line over here. this horizontal line. Since we added that line, let's just delete this. We already understand what's cooking around that support trend line there. I would just add this support over here and understand that as long as price action is below this support here, I'm focused on some sort of a reversal structure that can terminate at this POI. If I get a reversal structure, be it a double bottom, be it an inverse head and shoulders, doesn't really matter what it turns out to be. As long as my reversal structure terminates inside of this POI, that will give me reason to buy. All I'm doing is waiting for reversal structures below this level of structure. Obviously, if I don't find any entries here, then I wait for my reduced risk entries. Obviously, if price action does break above, then I wait for my reduced risk entries at the retest of this level of structure. Very simple setup. If we don't get an entry that terminates somewhere inside of here, at that point in time, we exercise patience, unless maybe we get different types of probabilities. Like if this low turns into something else and this gives us, then yes, we can trade. But we don't have all of that information there on our charts yet to make those types of forecasts. So let's work with the information that we have now, that if price action does not give us an entry here, we're not looking to trade at this support. Why are we not looking to trade at this support? Because price has the incentive to still break below these lows to seek lower price objectives before we make the move to the upside. There is an incentive for price action to still make a move to the downside. So we don't want to involve ourselves in those unnecessary trades. We'll trade where the probabilities lie. And at this point in time, here's a nice, beautiful, obvious momentum shift. And I think that should be enough. If we don't find the entry there, let's not force it unless we find a chart pattern that then again gives us new probabilities. But otherwise, I'm not trying to sell AUDCAD. I'm trying to trade AUDCAD in the direction of our high time frame bias. So we're nice and bullish. We might have some action here next week. So we'll put a young tag there. Going to be a little bit important for us to keep an eye on. Let's go on to some AJ. So on AJ, I'll be a little bit quick. I think let's see. I did adjust for structure. Yeah, I'll be a little bit quick because price action will take a while to get to where we want to get to if I do want to make the type of decision that I'd like to make here. So basically, what I've concluded here on AJ is that higher time frame, we're stuck inside some sort of a range, right? And wherever we're in heavy chop, we either look like we did say in AUDCAD, we either look to trade at the extremes or we wait for chart patterns to increase or to add probability to the structure that we are looking at. Now, in this case here, we've got exactly that two criteria. We've got price action giving some sort of a test there, some sort of a test there. So we know that there's resistance in this area here. That's a high. We've got price action giving us some sort of a test there, some sort of a test there. So we know that, okay, cool, that's a low. We've got some sort of a range, this being the extreme high, this being the extreme low of this range, since we're inside some heavy chop. And I primarily want to sell AJ or all of these JPY code pairs just because of the obvious higher time frame structure. If we just reflect, and because I know sometimes we might forget what's going on in a higher time frame. Why is this guy always forcing sells on these JPY code pairs? This is the reason why, just because of the context of what has been going on in a high time frame. First touch, second touch, third touch, deceleration, characteristics of a downtrend, lower lows, lower highs, lower lows, lower highs. So with all that being said, I'd rather trade in the direction of, I guess, maybe this high time frame structure that could do something nice to the downside. So that's why I've been forcing for all of these sells and just trying to sell these JPY code pairs, just to remind you guys what the high time frames look like. But otherwise, let's just get back to what we were talking about here. We're stuck inside some sort of a range, right? Now we've got both of those just dropping down in the time frame. So conclusion of our high time frame, we want to trade in the direction of whatever momentum we see breaking structure, breaking chart patterns, which is to the downside. So I still want to sell at least AJ. So going down onto a 4-hour, if we just look at the overall structure here, what I did is I accommodated for this entire corrective structure there. Obviously, we analyze where did this nonsense start. It started over here. This is a high. I accommodated for this new extreme high that we have there. We've got our ascending trend line. We've got our ascending support trend line over there. Now we've got a structure, first touch, second touch, third touch. And remember, if this, I think this POI we've had here for the longest of time, we waited, I'm not 100% sure if we were waiting for this to also terminate at that POI, but anyway, this didn't terminate at that POI. So we still have this POI as a nice valid area for us to still look for ourselves. Now we've also got a structure that gives us additional probabilities if price action does get to this resistance area as a third touch of some sort. So with this, we do have a setup on AJ, but I don't think I'm going to be looking at AJ next week unless we see more crazy momentum like this momentum over here and price gets there very quickly, then yes, we look at AJ. But until we break this high over here, there's no point in us looking at AJ because I'd like to sell AJ, and the only place to sell AJ with good probabilities is very high. So for now, we leave AJ nice and blank there. We're not going to be doing much. We'll go on to some AU. AU, we'll start off on a daily. Now, AU played out just so beautifully. Just so beautifully. Yeah, hey. Trading is just nice. It's just nice. It excites me. But otherwise, let's just look at the most recent price action here on AU, just so that we just stay relevant to what's cooking now. So if we just look at the most recent momentum, we've got some buyers coming into the market, giving us some sort of a new higher high. We broke above this high, we rejected, but we did break above the previous high over there, giving a new higher high. So we've got this momentum that completely reversed all this sell side momentum, breaking back into structure, right? So because of that, we want to be bullish on a higher time frame. Where can we be bullish? We can only be bullish at some sort of a support. Now, where do we have support? We've got this horizontal support over there, which we're expecting price action to break for the longest of time. So already we concluded, or at least we know that we can't be looking for buys here where we're expecting price action to break this low or this support. So we know that we should be looking for buys just a little bit lower. So all we're doing on a higher time frame is, yes, last week we were anticipating the third touch. Oh, this price action was just nice to watch. We anticipated the third touch, all that nice good stuff, heavy sellers, some dollar strength that just came out of nowhere, weirdly enough. Guys, okay, we'll speak about the world when we get to US30 and NASDAQ. We'll speak about what's about to go down, but it's time. What I'm saying is that it is time. There's 2 weeks left for a decision to be made, or shit is about to hit the fan. Let's continue on AU. The times that we are living in. If any one of guys, make your kids traders. Please promise me when you guys have kids, make them traders, because they will be so in tune with the environment they exist in from a financial standpoint. I feel so sorry for everyone that is my age that does not do this, that doesn't understand what financial environment they currently exist in, what type of financial decisions should they be making, how should they be preparing themselves in this type of an environment. I feel sorry for those type of people. And it's not because of negligence, it's just because of this not the environment that they're interested in. They'd rather watch soccer and play sports stakes or something else, or whatever the case is. But let's get back to what we were talking about, guys. Let's not digress too far for too long. Nonetheless, let's just drop down onto, so we're bullish, high time frame, we're bullish on AU. All we're doing, simple enough, let's just round up quickly. Simple enough, we've got this corrective structure, we've got momentum. We're waiting for a follow through of this momentum to obviously break the structure over there, meaning that next week, if we decide to find a young buy, a young sell, I will sell AU if AU decides to give me a young corrective structure or something that terminates at a nice POI that aligns with the level one. If there's a nice setup, I will sell AU. Same thing as last week. Last week, we were looking to sell AU. We're looking to buy AU. Same thing this week. We'll look to follow through on the sell side momentum. But once we break this low here, there is no way in heaven that we are looking to sell anymore. Now our focus is on reversal structures that are terminating, that are giving us reasons to go long inside. We don't know what type of a structure it might be, but once we break these lows, we're looking for upside momentum, reversal structures. That's it. So bullish bias on AU. I'll put a tag on AU since we might still get a young sell there. So we'll keep our eye on AU for next week. Let's go on to New Zealand AUDCAD. So New Zealand AUDCAD, also the same as AUDCAD in a sense that we've been exercising patience, waiting for the setup, but there has been momentum on Friday, like all the other pairs. Ask yourself, why? Why Friday? Why did they wait for Friday to dump all the orders? Guys, the environment is just so exciting. I hope you guys are following news to know what's going on. Bullish momentum, we've got a corrective structure. We want to trade in the direction of this momentum. So what we're looking at is there's a previous level of structure that we have here. That price action is obviously broken below. And we're expecting that, yes, if we want to continue with the upside momentum, we could retest this area and find bullish trades off this area at a future date in time. So dropping down onto the smaller time frames, that's the setup that we've been looking for. from last week also. There wasn't a POI, if you guys also remember from last week, there wasn't a POI for us to look to trade at. So what we agreed on was that we wait for chart patterns that are going to terminate in this area here, be it a double bottom, descending structure, whatever then increases. If you've got a descending structure, we've got a three touch structure that obviously at the third touch, we can find probabilities for the long. If we've got a double bottom, we've got a break and a retest that gives us probabilities. So we just wait for a chart pattern that terminates in this area that then gives us probabilities to find the trading opportunity to the upside. So still bullish on New Zealand dollar CAD, obviously just waiting for the momentum or trying to trade in the direction of all of this nice momentum. Yeah, patience is a virtue. Let's move on to, I think for now, let's not highlight New Zealand dollar CAD because price action is still very impulsive. But let's rather look at if we were looking at the CAD pairs, let's rather look at AC for the buy because it's just so much closer. Like if you guys just compare the two, things are just a little bit more juicy on AUDCAD than New Zealand dollar CAD. So let's just exercise some patience until a chart pattern forms. And then once the chart pattern forms, then we move this onto the priority list for next week. Let's go on to some New Zealand dollar yen. So New Zealand dollar yen, basically same as JPY code pairs, but this is one JPY code pair that I won't be trading at all, just because the chop is serious and the chop is just heavy. Yes, cool, we can isolate structures. If you'd like to trade the structure, there's a resistance that price action broke above, broke below. You can wait for a young retest and then continue to sell whatever structure this is there. But all of the chop that's going on now, for me, I just don't feel the risk. I don't feel like New Zealand dollar yen is worth the risk. I'd rather risk it on another JPY code pair, but just New Zealand dollar yen is just not appealing right now. So I'm just going to leave it out completely. Let's get into US30. Let's get into US30. So the indices, guys, the indices. If we look at what's going on higher time frame, I would agree. And anyone, I think other people would also agree that we're living in a very confused environment, right? There's a lot going on right now. There's a lot going on right now. There's a lot of reasons to be buying. If you guys look at the whole of last week and what happened last week, everything was taking a hit besides Google. Google was holding the whole, literally the whole stock market was being held up by Google and Meta and whatever, because every news release that they had, they put the word AI, and every time they said the word AI, the stock just goes up because people are excited about AI right now. Every time they say AI, things are good. The whole of last week was held up by just a couple of stocks that we can pick out. Everything else is about to hit the fan, right? Let's talk about what major decisions are we waiting for from the US. So at the end of this month, right? When is it? June? The end of June or beginning of June, the US is gonna reach their debt ceiling, right? Means that they've got 2 weeks left. 2 weeks. They were supposed to have a talk today, which they postponed. They've got 2 weeks left to make a decision on what happens before the US defaults on their debt. I don't know if anyone understands how serious the situation is right now and the fact that no one is panicking yet. If that doesn't scare anyone, maybe I'm just crazy. Maybe I'm just crazy. But if all of this is going on and no one is panicking yet, I think we should be a lot more scared than what is really going on. But anyway, US30. So if you guys remember, what we did say was that NASDAQ is our contingency for buys, and then obviously US30 is the contingency for sells. Now what I'm doing is I'm gonna kind of just say, let's throw away those contingencies that we had from last week. We trade the structures that we find with the probabilities that those structures present to us, because weird stuff is happening right now. What I'm waiting for, guys, there's one thing that we're waiting for. Let me tell you guys, the stock market is about to crash. We don't know when. I don't know when. No one can pick a time. But there are things that are aligning that every time there is a stock market crash, these things happen. the first thing that happens is that the yields in treasuries start to invert, right? So remember, there's different time lengths you could buy US treasuries for, or bonds, or whatever the case is. There's 10-year bonds that you hold for a period of 10 years. There's 2-year bonds, there's 3 months, there's whatever the case is. So obviously, it makes logical sense that something that you hold for 10 years should pay you more than something that you hold for 3 months or for 1 month. It makes logical sense. But now it is the total opposite. Now you get more money for holding US bonds for 3 months rather than holding US bonds for 10 years. Every single time this has happened, a stock market crash has followed. This is the first thing, right? Number two, the Fed has been hiking interest rates. Yes, they are hiking interest rates and they're breaking stuff. The banks don't like the fact that they're hiking interest rates because obviously the banks can't lend out as much money as they would like to lend, because remember that all the banks do is they generate new money out of money that they borrow from deposits, that they create out of money that they make from deposits, whatever the case is. So they happy when obviously interest rates are low, because lending and borrowing and all of that stuff is easy, and that's the model of a bank. So now that interest rates are going up, you can see what's going on. The banks are crumbling, but still the Fed is still not showing signs of stopping this whole interest rate hike thing. Once they do start to drop the interest rate, that is when things are going to hit the fan. That is when the whole economy will start to crash. Because once they do drop rates, they will be doing it for the wrong reasons. Remember, why are the rates going up? The rates are going up because of inflation. That's the underlying cause that is going on in the background, that this whole house of cards that we are watching before us is about to just crumble and fall. Guys, this is just so exciting, and I'm so glad that I'm competent enough to follow and just be aware and learn, because it's going to happen again. It's happened before, it will happen again. And even if you don't make money this time, if you're competent enough to watch what is happening the next time, you might just have the money to be able to make something of it. Just watch what's going on. I'm just so excited just to watch. I don't even, at this point, I don't even care if I make money off the crash or off the whatever. The environment is the most educational environment ever. You guys are sitting on things. If you are just passively trading and every day you just open US30 and you look at highs and lows and that's about it, there's so much more that you guys are missing out on, especially in this environment, and it's not going to last long. Otherwise, so US30, how we've been trading US30 is we've obviously just been trading the structures that are there. So basically, if you just look at what's going on right now, the only extremes that we had that we were looking to trade from, we were obviously looking to buy down low, and we were looking to sell up high based off the chart patterns that we were looking at. But we were looking at all of this on a 4-hour from last week. Yeah. So anyway, what we have now is we've got some new momentum, right? We've got price action obviously rejecting this resistance, breaking this support structure. Some nice momentum, obviously a lot more momentum than we saw breaking resistance. So naturally, so I would like to be bearish and I would like to follow through on this momentum. What we do have is a nice set of equal highs over there, or some sort of a resistance. So our job becomes easy. Look for a point of interest above your resistance. Wait for price action to break resistance. Once price action has broken this level of structure, reversal structures that terminate where we want to see price action selling from. That's a simple job for a sell on US30. Job for a buy on US30, I feel like I'd wait for US30 to go a little bit lower before we get happy chappy about aggressively holding and holding buys specifically. We can, but yeah, guys, you know what's happening. I feel like where my confusion is, let me tell you guys why I'm a little bit back and forth about what's going on. My confusion is that, cool, I accept the fact that the world has changed, and the people that are trading now, that are actively making a lot of the decisions that are going on now, it's a different generation, right? Yes, it's a new generation, it's a different generation of people. But at the same time, let's not forget that people that have control of the most capital, the people that are behind the biggest hedge funds that are operating right now, are still the same old timers that have been through the 2020, 2008, 20, or whatever, all the crashes before. Those are the same people that are still in charge again. They're going to play the exact same handbook of cards. It's just going to be so interesting. Let's just see what happens. Let's just see what happens. Because I'm going to just make a whole lot of noise. I'm just going to make a lot of noise. Let's see what you guys are saying there in the chat. Most are seeing a potential inverse head and shoulders on US30 on the daily. Yes, at that support. I do see that inverse. Yes, from basically a right shoulder setup at this POI. I do see that as well. Possibly a recession in the US in the next plus minus 12 months. I feel like we're already going through the recession, man. I feel like we're already going through the recession. They're just playing it off. Like they are playing things off and they're making us focus on the wrong things. They're making us focus on AI, they're making us focus on the banks, and they made us forget about all of the nonsense that was just going on, inflation, trade wars, all of that. They made us forget about all of that stuff. It's still happening. It's not like they got rid of it as some magic pill or whatever. It's still going on. The new problems that they're making us focus on are additional problems. They're not the only problems that exist now. Ish, guys, yeah. Yeah, I'm bearish. Let's go on to some NASDAQ. The setup on NASDAQ is very exciting. The setup on NASDAQ is quite nice because I guess even if maybe one were to look at this as some sort of a resistance, we're at some sort of a resistance, right? Now, if you guys remember from last week, I told you guys that the only two places that we're looking to sell NASDAQ from, yes, we can buy inside of here, do whatever. But if NASDAQ ever gets to any one of these two PRIs, we're going to be looking to sell. Interesting enough, Friday, the day that they were looking to dump orders. Guys, it's a joke right now. You know what's happening right now? Right now, institutions are just running us over. There are no retail traders that are behind any of the anything that's happening right now in the market. There's no retail behind it all. We are literally just being taken for a ride right now. Just watch the ride, enjoy, focus on what's going on, and learn what's happening. And check the timeline. Look at the timeline. Specifically look at the timeline and the events that are going on, things that are causing what and how people are responding to it, because the same stupid mistakes that they made the last time. Rinse and repeat. Anyway, NASDAQ, we're at some sort of a resistance, first touch, second touch. We decelerated here towards the third touch. And then we've got some nice momentum to the downside. So naturally, so what T.Mayne is doing, yes, T.Mayne wanted to sell from here. T.Mayne is still going to want to follow through on whatever downside momentum. So all I'm going to be doing on NASDAQ is just focusing for continuation structures to try and find some downside continuation. So any corrective structure that obviously increases probabilities or gives me a setup, whatever the case is, I'm going to be 100% bearish on NASDAQ for as long as maybe we get to this area here. Yes, we'll question ourselves there, and then we'll question ourselves here. But I think let's wait and see what goes on. If we do pull a corrective structure, I'm going to be pretty much bearish. Maybe if there's a buy, let's look at US30 for a buy. We'll find something somewhere, but whatever the case is, NASDAQ, yeah, NASDAQ has been a ride, and Google is what's holding NASDAQ up right now, Google and Meta. And whenever all of this hype stops, when people realize what is going on, and the fact that every new news release doesn't mean the company is doing better, but they're just trying to compete because other companies are doing the exact same thing. Guys, we're just being taken for such a ride. I don't know how to respond to it, because it's the biggest joke. It's the market right now is just the absolute biggest joke. We're just going to wait and see. When stuff does go wrong, I can bet that it's probably going to be too late. And when it's too late, then they decide to try and remedy what's happening. It's going to end up a lot worse than, than what's going on. This market crash is going to be worse than what happened in 2008. And that's exactly what's going to, you see the 2020 lows, the coronavirus lows. I can even bet this crash is going to hit those lows and go lower than that. Like I'm that certain that as humanity, we have fucked up and we are not realizing that we went wrong, and we're still trying to paint a rosy picture, and this rosy picture doesn't exist in reality. Like in reality, the rosy picture honestly doesn't exist. And the longer they hide it, the harder it's going to be to fix it. Human beings. But I guess maybe that's just what's necessary for the market to complete its cycle. Yes, we went through an expansionary phase. We went through the phase of easy money. 2020 money was so damn easy, and banks and institutions and everybody loved it. They even went back and broke coronavirus highs because they gave them easy money. Now all of that easy money is stopping. Not only is it stopping, it's becoming harder to borrow and to lend money. It's becoming more riskier to do that. So the environment has completely 180'd. Literally, quite literally, completely hit a 180. Anyway, Susian. So Susian, last week we were waiting for that continuation structure. I think we spoke about this first or second or third touch in an update. And what we were waiting for was a pullback to get in over here and then continue down. And she just kept going. So all we're going to do is we're going to just accommodate and adjust for what's going on there. The first thing that we do is we go ahead and we at least, oh, I'm going to delete the wrong thing. We go ahead and we delete what was going on in there, just so that we can readjust and evaluate and see what's cooking inside of here. So obviously this is our last resistance that we have over there. And price action is being corrective around this area of resistance. We've broken below, we've broken back above, so there is no looking for a retest of a level of structure, whatever the case is. So now we understand that as long as price action is inside of this move over here, as long as we're inside of this momentum, this could be still a buyer's market. So if ever I want to try and sell something, I want to be looking to sell at some sort of an extreme high. And at this point in time, there's no POI that we can look to trade at safely. The only one was at this 4-hour POI there. And we tapped that last week, and she didn't give us a trade entry last week. So we can't be looking to trade at that same area. The only other area for us to trade at is up high. So let's look at these two resistances here. If we don't get a sell from this resistance, then we've got no choice but to wait for a sell very much up high over there, and we just unfortunately need to exercise patience. But otherwise, that's Susien. I am still bearish bias. I will wait for things to change if they need to change. It's fine. I'm bearish bias. Cool. We're 100% done with the analysis, guys. Let's see if you guys have any questions or anything to say there in the chats. Otherwise, if I see a couple of thumbs up there, that means that we are all sorted. There's no questions. I'll say let there be peace, and then we'll call it a session. We'll see you guys in the groups. Very interesting conversation that we had. And let there be peace there from Mlizo. Otherwise, guys, thanks so much for being part of the session. I really appreciate you guys obviously taking your time out of your weekend to prepare. I hope you guys do feel prepared, because next week it's going to be a week where you need to be more reactive than predictive. We predict to prepare for the situation, but we can't say what the situation will be. So let's be reactive to the price action. We trade what we planned, and obviously we react to what we see, which is going to give us the times to make our decisions. We know what decisions we're going to make. We're looking to buy, we're looking to sell, we know from where, from what. The timing, that is where, or that's where we require to be reactive, is the timing. When am I supposed to perform as a trader? So otherwise, guys, let there be peace in the streets. Let our brothers and sisters be safe. Let me call it an end of a session. We'll stop the sharing over there. I'll see you guys in the groups. Cheers.